Everyone, dear Group 93. I am Yuan Lee and you can call me Weeby. In this presentation, I would like to go for question 1 and will explain the answer for you. So let's get started. I am the new accountant for Western Limited and Western CEO Mark want to developing one Western pride a sizable price of land in the northern part of Sydney in recently. This sizable price of land is a major part of the city's development during the past decade. Western is waiting for the approval from the relevant state authority to build 2,550 houses, a golf course and an activity centre for Government of Sydney. When Western is waiting for the approval, they are sending some survivors to inspect. A couple of survivors found rat and potentially worm spider on the property. The spider is the reason why
Hi everyone, my name is Shilan and I'm going to talking about this presentation. The question 2 is analysis and discuss the implication of financial statement. If the land impairment is taken into account, consider this effect in the context of various stakeholders such as employees, lenders, and investors. Firstly, if land impairment is taken into account in financial statement, the impairment loss make it into total operating expense section of an income statement and thus decrease corporate net income, as known as impairment charge. Asset impairment is intended to ensure that assets of an entity is not more than the recoverable amount, that is, the fair value less cost, higher processing and use value. In addition to annual goodwill and certain intangible asset impairment test is required. Physically, impairment test is required. There is sign of asset impairment. And unit tests can produce cash asset will not generate cash inflows, large independent of others' assets. Once a company has determined that an asset is impaired, it can write down the asset or classify it an asset for sale. Assets will be written down if the company keeps on going use the asset. Impairment assets held for sale are assets are no longer in use are expected to dispose or abandon. This is a accounting impact. Assets held for sale must be written down to fair value less the cost of selling them. This asset can no longer to be depreciated. After impairment, depreciation expense is calculated use new asset value. So if the spider problem goes away and they can unload the land for closer to 50 million, so everybody wins. Second, if the land really is impaired and if it's really only worth 10 million, the Western obviously is looking at pre-tax impairment loss of 40 million. Collaborate the damage here would include employees' bonus plan. So there is affect the employees, which covers all non-salary workers. It has been a while since the employees has gone much in the way to bonus, and they are hoping for a good year. So next to affect to the lenders is the if the loss has been happened, Western company debit to total equity ratio spike to one of their loan covers is tricky. So according to this year, by the past few years, have been one of the Western lenders has expressed serious concern about earning and cash flow, and also to affect the investment. So in the financial reporting, land impairment will affect to investors the profitability, and asset value produced a decline in the statements of changes in stakeholders' equity because high expense and lower income affect the return earnings master account, which is equity statements item. Reduced asset value also create a numerical dent in the company balance sheet, especially in the total resource section. So according to this, all the effects, the stakeholders and employers, lenders, investors, they all affect their like the non-salary to the employers and investors' profitability. And that is all our presentation. Thank you.